Hi folks, welcome to today's Bobcast. I'm Bob Binney.
I'm Jessie Thompson.
And we're both certified financial planner professionals with Bob Binney Wealth Management right here in Lincoln, Nebraska. And so the title of today's Bobcast is The S&P is on a winning streak, what's next? And so the S&P is a measure of the stock market like the Dow. It's a more accurate measure of the stock market because it's the S&P 500, 500 different stocks, the 500 largest companies on the New York Stock Exchange. Year to date, it's up 15%. To date is
just about
15%. Today is October the 8th. But for the last 5 months, it's been up every month, and it's up about 20% for the last 5 months.
And it had to kind of dig itself out of a hole that happened in April, if you guys remember, with the news going crazy about the tariffs. A lot of people freaked out, pulled money out of the stock market.
Panic selling.
But it's gone way up since then. So a lot of times when the stock market is on a winning streak or when it's had a lot of real good months, there will be people who talk about there's a crash right around the corner. And we've done a couple of Bobcasts on this already, but there's perpetual bears that you can find news articles about things that they say the next crash is imminent or it's coming or whatever. Literally any time, they're always saying that the stock market is going to crash, and someday they're going to be right, because eventually, every now and then, the stock market goes down, and it's a perfectly normal part of investing. But there are people who are always saying that it's coming and you need to be afraid and worried, and maybe you need to change your investments because it's right around the corner.
Yeah, and they're saying that it's coming because it's done so well.
Yeah.
So as of the end of September, the S&P 500 stock market index, the broad index of these 500 largest companies on the New York Stock Exchange, was up for 5 months in a row. Historically, when this has happened, the following year brings positive returns, averaging 12.6% in 28 out of the last 30 times it has happened. So it's actually statistically and historically more likely that the stock market's going to go up better than its long-term average of 10, in the next 12 months after these 5 great months. So we have positive expectations for the rest of the year in the stock market. That doesn't mean we just have positive expectations, but it's based on earnings, and these companies are making money. And they're growing their profits, and as companies grow profits, their value goes up. And they're not overvalued right now based on earnings substantially. And it's certainly the best place, in our opinion, to have money invested to protect yourself from inflation.
Yep. And so what does this mean for you? This means that, number one, don't listen to the perpetual bears. When it comes to the stock market, a bear is someone who thinks negatively about it, thinks the stock market's going to go down. There are perpetual bears out there that always think the stock market is going to go down tomorrow or within the next few months or whatever. Don't listen to those people. They're wrong most of the time, because the majority of the time the stock market is going up. The stock market on average has returned about 10% a year over its history. Now sometimes there's years where it's down quite a bit, and yes, that's a normal part of investing. But for the most part, as the economy grows and the companies that are on the stock market grow, the prices of those companies, those stocks, and the price of the stock market are also going to grow.
We call those, if I could interrupt, we call those perpetual bears fearmongers. It's real easy to sell fear. The news media likes to sell fear, and in certain ways, some people like to be scared. Don't be scared. This is a good time to be confident.
Yep. So it's going to be, the other thing that it means to you is that it's going to be impossible to time when the perfect time is to be investing. It's impossible. If you have cash on the sidelines and you're just waiting for the perfect time to invest it, you're losing out. So the best time to invest is always now, because you do not know in the short term. Nobody knows or can accurately predict what the stock market is going to do. And studies have shown again and again that time in the market is much more important and results in much better performance than trying to time the market perfectly. So,
and she mentioned cash on the sidelines. We're talking about checking, savings, whatever, that sort of thing. You know, you're only making 1 or 2 or 3 or maybe 4% on that cash on the sidelines in money market accounts or whatever. And that's better than it was a few years ago, but it's not enough money to stay ahead of inflation. And so we believe, and have been talking about for a while, that the greatest financial threat to all of us is this super high inflation that's here, and that we believe is going to continue for a while. And we believe the best hedge, and historically it's proved to be, the best hedge against high inflation is owning companies that produce the goods and services whose prices are going up, which is what inflation is. So anyway.
thank you so much for joining us on our Bobcast. Make sure to like and subscribe so that you can see when new ones come out. We hope you have a great rest of your week.
And if you have anybody that's a family or friend that could use some help, you can share the Bobcast with them or have them give us a call. Thank you very much. Have a blessed day.